In 2022, we published our thesis on crypto and AI. And then since that time, we've been partnering with some of the most incredible founders in the world that are focusing on decentralized AI, this intersection of crypto and AI. The overall thesis is as follows. There's about 5 guys that control the internet today. And as you look at the AI stack, from data to compute to inference and training, they have a lot of those elements, and they can train in their own desires to get the outputs that they prefer. We think there's an alternative, and that alternative is something that's more open and transparent, where training is done out in the open. Companies like Pluralis, for example, where you can leverage compute, decentralized compute, where you can actually garner more compute, more efficient compute, to generate the outcomes you desire. And so it's a very, very exciting vertical. It was a very contrarian take. I think now we're seeing some very interesting breakthroughs that people are saying, well, wait a second, maybe this can actually work. And maybe in certain cases it can be better. But from my perspective, I love the idea of something that's open and transparent versus something that's closed and not. So it'll continue to be an exciting vertical, and it's one that we're focused on.
This episode of Encrypted is sponsored by Gate, a leading global cryptocurrency exchange established in 2013, serving over 35 million users with spot, futures, and margin trading for 3,600 plus cryptocurrencies, holding $12 billion in reserves with a 124% reserve ratio, and ranked second worldwide in 24-hour spot trading volume. Welcome to the Encrypted podcast, your gateway to the future of technology and innovation, right here in the heart of Dubai's dynamic tech universe. I'm your host, Maria Vovchok, and together with Dubai Blockchain Center, we are embarking on a journey that unravels the minds of tech visionaries through the digital frontiers that are shaping our world. Hello and welcome everyone to Encrypted Podcast. I'm your host, Maria Vovchok, and today we're really happy to have here Christopher Perkins, who is the president and managing partner at CoinFund, where he leads the first strategy bridging crypto-native innovation with institutional finance. Prior to CoinFund, Chris served as global head of futures clearing and FX prime brokerage at Citi, and also as U.S. head of derivatives intermediation at Lehman Brothers. A former U.S. Marine Corps captain, Chris is also a policy leader serving at the CFTC's Global Markets Advisory Committee and inventing the composite Ether staking rate. Under his leadership, CoinFund has been expanding its global engagement, including a growing focus on the UAE and Dubai's dynamic digital asset ecosystem. Chris, welcome to Encrypted. How are you doing today?
I'm great, Maria. Thank you so much for having me.
Thank you for as well joining Encrypted, because we were thinking about this for such a long time. So I'm happy at least we can do this online.
Thank you.
Chris, what else do you believe our audience should definitely know about you that maybe I haven't mentioned yet?
Oh no, I'm just a guy who loves to be. I love crypto. I got into crypto, around 2014 or so. I was actually sitting next to a lady at Citigroup, a lady named Sandy Call, who now is the head of innovation at Franklin Templeton. And we started studying it together, and it's just funny how over the years I tried to get it to work within the institution, and then eventually I just couldn't deal with it anymore, and I had to do it full time. So I joined CoinFund 4 years ago. We actually just had our 10-year anniversary as a company, which is kind of a long time in crypto.
Fantastic! Congrats.
Yeah, so things are going very well. And then about our company, we have a handful of strategies. We have a pre-seed and seed strategy where we invest in early stage founders. We have a venture strategy where we invest in companies around the Series A and Series B stage. And then we have a liquid strategy where we invest in liquid tokens and equities now. And really one of the interesting trends we're seeing now is the emergence of these digital asset treasury companies that kind of bring everything together. And so for the last few years, I've really been focusing on this convergence. How do I bring the traditional finance side together with this incredible innovation on crypto? And I'm telling you right now, we're seeing it happen in real time. So it's a really exciting time for us.
Yeah, that's true. And actually, when you said that you joined crypto back in 2014, it's like really, you're one of the early adopters. Can you say what made you think that this is going to be a part of the future?
Yeah, for me, it was very practical. I immediately started focusing on just the concept of smart contracts and settlement. So when I was in traditional finance, I was running clearing businesses where we would see billions of dollars moving through the system. And I was an intermediary. I ran the largest clearing business in the world. And sometimes what would happen is like the clearinghouse would call me for billions of dollars of collateral, and I'd be waiting on it from my clients. And if it was yen, sometimes it would take days to settle. And, it was a very uncomfortable position sometimes when you had big stresses in the market. And so when I understood that we could have this real-time settlement, it kind of opened up the world to me. And I'm like, wow, this is just a much better way of doing things. And I found myself running, again, one of the largest intermediaries in the world. And I'm like, wait a second, am I really needed anymore? And I think the answer is yes. We'll always need intermediaries to do certain services, but there's also another way. The other thing is when we went through the global crisis, I was at Lehman Brothers, and the solution at the time was extreme centralization. So I was working in derivatives. It was a $700 trillion industry. And what we decided to do, as the regulators and the governments, and they said, you know what, in order for us to prevent the next, Lehman Brothers crisis, the global financial crisis, we're going to centralize all of it. And we're going to pour all this collateral, and we're going to make it centralized as heck. And that was the only solution they really had at the time because there was no other technology. And along comes blockchain technology where you can actually, instead of centralizing, you can decentralize and spread out that risk, which is probably a more resilient model. And the last thing, the last thing I'll tell you is that I was also in the FX space. And if you study the history of markets, entire banks have gone bankrupt because of settlement risk. And, as again, running the largest FX prime broker in the world, this is risk that you wear every day. And in fact, in 1974, there was a bank called Herstatt that went insolvent. Why wouldn't we use this technology that can settle in real time, eliminating this risk once and for all? So those are some of the things that just the utility aspect of it that really turned me on. And it was, and from there, I just got obsessed.
Yeah, actually, as I said, you have really fascinating background. What I can say, not only as I mentioned, Lehman Brothers, Citi. So taking into account your successful finance career at Citi, service in the U.S. Marine Corps, how these experiences shaped your, let's say, your perspective, how you're leading CoinFund, and how are you looking at Web3 space in general and some potential investment opportunities.
Yeah, let me talk a little bit about the Marine Corps. It's a really incredible organization that has an amazing culture, amazing people. And the thing that I really learned about it was, you get really focused on the mission. You're able to do a lot more with less. Teamwork is really, really important. Leadership is, you learn about leadership. And you also learn about risk management. And so, I'm an Iraq veteran. I was in the Battle of Ramadi back in 2004, which was a really tough fight. And you can, when you're in finance, you have bad days sometimes, but your day is never as bad as some of the dark days you experienced, when you were in combat. And so my unit had a number of different casualties. So, it gives you this perspective and this resilience that no matter how, like we went through some dark days during the era of Gary Gensler, but no matter what, it teaches you to get together with your team, be resilient, push through, and focus. And, so I think those lessons were really helpful for me. Just to sometimes you just need a little grit and you need to muscle through when the going gets tough. And, you see that with founders every day. Right? These entrepreneurs, they take a lot of risk. They used to take a lot of personal risk, I would say, back, when the regulatory climate was not good. And just, I was really appreciative of watching their grit every day and muscle through some of the challenges that they face. And wherever we can help provide, insight, advice, counsel, shoulder to cry on, or even open up opportunities, really love, getting into the trenches with those portfolio companies and helping them fight through. And I think those are some lessons I learned in the Marine Corps.
That's fascinating. I would say definitely that resilience, it's one of the things that I was expecting you to say, and I can definitely say it's really definitely helpful in financial markets for sure. Especially I would really want to know, because I was looking into what CoinFund has been doing throughout the years, and obviously it's not only Web3, it's not only focused on Web3, but also AI. With the rise of AI, I like the point that you mentioned about decentralization, because right now there are still more centralized AI companies, but there are
Yeah.
still some new, very interesting decentralized AI projects coming up. And I saw that CoinFund is also interested in those ones. Do you see as the next big breakthrough in this area that we're going to see, or still there will be more of, again, centralized AI companies dominating the space?
It's a really great question, and hat tip to my partner Jake.
Mm,
He's really at the forefront of this innovation. So CoinFund saw that this intersection of AI and crypto was the future and a very big deal, and it was a very contrarian take at the time. And maybe for some it still is. I mean, we still get challenged quite often, but we made our first investment in the space in 2021 with an investment in WorldCoin.
mm.
In 2022, we published our thesis on crypto and AI. And then since that time, we've been partnering with some of the most incredible founders in the world that are focusing on decentralized AI, this intersection of crypto and AI. The overall thesis is as follows. There's about 5 guys that control the internet today. And as you look at the AI stack, from data to compute to inference and training, they have a lot of those elements, and they can train in their own desires to get the
Mm.
outputs that they prefer. We think there's an alternative, and that alternative is something that's more open and transparent, where training is done out in the open. Companies like Pluralis, for example, where you can leverage compute, decentralized compute, where you can actually garner more compute, more efficient compute, to generate the outcomes you desire. And so it's a very, very exciting vertical. It was a very contrarian take. I think now we're seeing some very interesting breakthroughs that people are saying, well, wait a second, maybe this can actually work, and maybe in certain cases it can be better. But from my perspective, I love the idea of something that's open and transparent versus something that's closed and not. So it'll continue to be an exciting vertical, and it's one that we're focused on.
Talking about focus, right now everybody's paying attention to what is happening regarding crypto regulations in the US, including the recent Genius Act in place. How do you anticipate how this Genius Act how will it reshape the existing stablecoin landscape in the US or globally, and whether it will influence the CoinFund's investment strategy into more stablecoins?
Yeah, I don't think the market really appreciates how big a deal the Genius Bill is going to be.
Tell us.
Oh yeah, this is the first federal crypto law that's come into fruition. And if you listen to our own Treasury Secretary in the States, he's projecting $3.7 billion in stablecoins are coming in, and it's going to be purchases, and they're going to be used to purchase Treasury bills. That's a pretty big number. It'll double the size of the crypto industry. And I think if many governments around the world, they're saying, hey, listen, this is a payment stablecoin. We're going to be suppressing interest. But from my perspective, I think it's actually going to be used as a store of value, particularly in the developing world. And from a U.S. perspective, I think the government's excited because they're going to say this is going to perpetuate the dollar as a global reserve currency for decades to come. But why is this a big deal for crypto? And I think it's because there's no interest. What are people going to do if they use it as a store of value? It's a depreciating asset without interest. So they're going to say, well, wait a second, how do I get this yield? And that takes them right to DeFi, because DeFi is where you can generate that yield, and then again, it's no longer a depreciating asset, and it stores that value even more thoughtfully. And then they're like, okay, it's kind of a pain to try to navigate to get my best yield. Maybe I can take it to vaults. And we just invested in a company called Veda that provides some of the leading vault infrastructure. And what vaults do is they abstract a lot of the operational complexity, and so you can just enter into a strategy to optimize your yield. So that's one area that'll be in focus. And then they'll say, well, wait a second, like, I'm not so sure how to optimize this yield, manually. Why don't I just bring in an AI agent who can do it for me? And with one click, that agent, the thing about agents is, and AI, very, very good at optimization. And so we have a company called Giza. They have an agent, Giza, Giza. And what you can do is you can commission, they have a program called Arma. You can commission an agent and it will go forth and optimize your yield. And so this is going to be a pretty big deal. $3.7 trillion coming in. A lot of it will go to DeFi. Then it'll hit then it'll go to vaults and then AI and then agents. Okay, so if you're in other countries, you're going to say, well, wait a second, like the US dollar is going to be everywhere. I need to tokenize. I need to get my stablecoin out there as well. And now we're going to see the unlock of FX. FX is a $7.5 trillion a day industry. It is humongous. And again, you actually get improved utility through tokenization because you eliminate settlement risk, which is one of the biggest risks that impacts FX markets. So I think it's going to be an impetus for FX, which I'm very excited about. And I mean, these are just a couple of the things that we're going to see, but it's going to transform global financial markets, and I'm very excited to see it. And then after June, yep, go ahead, Maria.
Yeah, please expand, because I was wondering, like, because you said it's only a few things, but I would like to know more. How, for example, the stablecoin regulation, including all the other developments that are happening right now in the US, how do you think they will shape the crypto market in the US and globally as well?
So what we're seeing is this massive period of regulatory de-risking, and it's legitimizing the asset class. What that does, so if you step back, you have a lot. Previously, you had a lot of reputational risk, and so investors were a little bit reluctant to come in. They're very happy to take market risk. That's what they get paid to underwrite, but they didn't want to take reputational risk, and that really manifested itself with regulatory risk. Now that that's coming off the table, I think investors are much more comfortable coming in, but that's only half the equation. The other half of the equation is the fact that you had developers, and if you look at the Web2 space, we believe that there's about 30 million developers in Web2. In crypto full time, there's like 10,000. And let's just say I'm off by a few
20
thousand.
maybe.
Right? Like maybe 20, right? But now that you have that regulatory de-risking, it takes a lot of courage to become an entrepreneur. And maybe you didn't want to because you didn't want to go to jail or get in trouble with the SEC. So now you're going to see, I believe a lot more of those 30 million coming into the space. And so you have this really interesting collision of capital and entrepreneurs. And I think it's going to be very, very beneficial for the space because of that regulatory de-risking in that foundation. Institutional adoption is happening in real time. Institutions stayed on the sidelines. You used to have reputational risk for being in crypto. Now you have reputational risk for not having a plan and not having a strategy. And so, like, I'm on the phone all day with the top institutions across the world, the top banks, the top intermediary, you name it, right? And they're all desperate to either, partner with portfolio companies, have their own strategies. They need to have a crypto strategy to survive at this point. And many of them are like, I don't want to be, Kodak. I don't want to be, they see that this in certain instances could be existential. So they're moving full speed ahead. It's really exciting. And it really all comes down to that foundation of regulatory certainty, transparency. I will tell you that stablecoins was a great start, but the Clarity Act, market structure is going to be very important as well. That's a much, much tougher bill to get through. And even in its absence, when I speak to the CFTC and the SEC, I mean, it's a 180-degree shift. They're working hard to provide that clarity where they can, even in the absence of law. But it would be great to get the Clarity Act done and have clear market structure. And then, I realize, you're in the UAE, I'm in the US. It's important that what I've seen over the history of my career is that oftentimes the larger jurisdictions lead, and then the local jurisdictions close the gaps. And so regulation is never identical. It's consistent, not identical. And so, as the US moves forward, you're going to see global regulatory de-risking as people reconcile with those bills. So it's a very exciting time because of the foundation that regulatory certainty delivers.
When you said about Clarity Act, do you think it's going to be approved anytime soon? When you said like you're hoping for that, is there any sign when potentially it can happen? And will it happen in the nearest future?
So the administration is really hopeful for clarity to get done by year end. I hate to say it, I'm a super bullish guy, but when it comes to timing, I'm a little bit bearish on this one. Having operated in and around DC for a long time, there's a lot of complexity around this bill. And it's not just Democrat and Republican. I think we have really good bipartisan support. The problem that you have is that you have different parts of the Congress that administer and oversee commodities. That's the Ag Committee, versus securities, which is financial services and banking. And so when you start trying to figure out jurisdictional lines, it extends beyond just the regulators and it goes up into the Congress. And I think that's going to take a lot of discussion and time. So I'm confident that we end up having something really good. But this is new ground. Like in the U.S., it's pretty interesting and maybe a little bit crazy. But the way that our law works is that everything in the world is a commodity, except for onions, movie receipts, and securities, securities are a special type of commodity. And commodities traditionally are not regulated. They are regulated for purposes of fraud, manipulation, and abuse, but they don't have direct regulation. Now we're trying to introduce this concept of digital commodities, which are regulated. So it's complex, and it's going to take time. And we don't even have a CFTC chair right now. Brian Quinten's he hasn't gone through the process yet. I hope he does. I think he's going to be exceptional if he gets confirmed. But we also need to make sure leadership is in place so that they can help work with the Congress to get these policies done.
Chris, as you mentioned, as you're talking to a lot of banks worldwide, I'm just curious, are there still some of them left that are still reluctant to work on their crypto strategy, or this is already a non-negotiable matter at this point?
I think all the banks. It's funny. I spoke to a very senior member of one of the big GSIBs, and what he told me was he's like, the last 4 years, the regulators would come in and they would ask me what I'm doing with crypto, and I'd say nothing, and they would say great, and they would leave. He's like that it was easy for me, and he's just like now they're coming in and like, what am I doing in crypto, and I don't have answers, and that's not a good place to be. So I got to catch up. So I think every bank that I talk to around the world is very, very focused on having a thoughtful strategy. I'd say there's one that is a little bit maybe it needs to get their act together, and that's the Bank for International Settlements. That's a central bank of central banks. I continue to see negative concepts and research coming out of the BIS. I think that it's the central bank of central banks, so maybe you can expect that because they are very much focused on centralization. But I would love to see a lot more positive. There's a couple of things that they do. They also help set capital rules, and so I think that they have to come to the realization that it's time to move forward rather than fight. And so I've been pretty critical of them in the press, and I think I would love to engage with them, but they seem to be trying to push back. But I do think that that's perishable, and I think pretty soon you're going to see them come along.
Well, actually, over the years, if I'm not mistaken, they would issue multiple reports on central bank digital currencies. But right now, when we're talking about specifically stable coins, and they are issued by private issuers, not exactly, it's not the same, by the way, for some people, important to understand the difference between the two, CBDCs and stable coins. Do you think because they were working so, like in this case, actively on promoting CBDCs, it may be the thing that they are not exactly reluctant to look into stable coins that will be issued by private issuers, not banks?
Yeah, I think that's certainly the case. And look, stable coins are not without risk. We've seen them have risk. And I think the beautiful thing about things like the Genius Bill is they try to address that risk head on through transparency, reserves, et cetera. And so I'm very excited that, we're working with governments to de-risk, and address some of those risks, but nothing is without risk. And so I think it's, again, yes, they've been totally focused on CBDC centralization because they are the central bank of central banks. But I do think that if they were to refocus on the principles and principles-based approach, I very rarely see anything from them talking about the mitigation of first stat risk and the systemic benefit of improved settlement and efficiency. And like, even the fact that, is it a bad thing to have people in Zimbabwe and Venezuela and other places across the developing world? Is it a bad thing for them to have access to dollars for the first time? I would, just from their mobile phone or the internet, I would argue that that's not a terrible thing. But they're concerned about undermining local monetary policy. In certain cases, I think maybe it's a good check on local monetary policy. So we'll see what happens. The thing is kind of, I know where the world's going, and I imagine in time they're going to have thoughtful policies because, again, this is technology. It's not good. It's not bad. Think about ways that it can improve and drive your principles. And in this case, I do think it can provide a much more resilient system.
CoinFund, Chris, throughout the years have shown and have proved to be forward-thinking fund, including obviously the management. Can you please tell us what are the projects right now and the areas you're looking specifically into, apart from the one that you mentioned?
Yeah, look, we look across blockchains. We're not maxis in one place or the other. And we look across verticals, and I would say that there are really exciting opportunities across almost every vertical that we look across. We talked about DeFi. I do think we're going to have a DeFi renaissance because of all the stablecoins coming into the space, as I mentioned. We continue to look at CeFi as well, whether it's Borrow Lens or other types of value-added centralized companies. Gaming is still, we've done some investment in gaming. That's a major TAM. That's another vertical I think that is set to continue to grow. We talked about the intersection of AI and crypto. Very, very exciting. We've been operating in this space since 21, as I mentioned. We'll continue to see things there. The stablecoin vertical. Look, 99% of internet money is dollars. It's not going to be like that forever. I think there's plenty to do there. And the other thing that I really like to focus on is fixed income markets. So you see a lot of people focusing on spot prices and this and that, but fixed income in traditional markets is humongous. And we talked about the Caesar rate that we built. There are rates everywhere in crypto, and the rates industry is a $500 trillion industry. You're going to start seeing more and more of that coming into effect. We've also been looking very closely at these digital asset treasury companies. Really, really fascinating concept pioneered by Michael Saylor with Bitcoin. Now, against the backdrop of regulatory de-risking, you're seeing treasury companies, coming up with all new types of innovations. And now, if you're starting to have a treasury company around some of these proof of stake networks like Ethereum or Solana or others, Avalanche, you can actually generate yield within that structure, which is a lot more efficient than ETFs. ETFs have daily liquidity. It's very hard for bonding and unbonding if you want to get into the details. But we're seeing so much innovation around what we call these DATs. I think that's an exciting space to watch. We're seeing a flurry of activity. Is it going to be, is there maybe some exuberance now, perhaps? But at the end of the day, that's been a breakthrough innovation. And what's really cool about it is that it actually sits on the absolute convergence of crypto and traditional finance, because now you have this wrapper, and and people can access these companies to their brokerage accounts. So that's really exciting. The last thing I'll talk about is tokenization. Tokenization is a
big
big
elephant
deal.
in the room.
Oh yeah, and it's going to be a monster. I could probably talk about this for another hour if you want, but
please do.
Here's the long. Okay, here's the story. So my thesis is that public markets in the United States are broken. If you look at the IPO, we raised $30 billion in IPOs in 24. That's coming back. If you adjust for the COVID anomalies, public markets are really on a downward trajectory, probably negative 5% CAGR over the last 20 years if you adjust for them and account for inflation. So public markets have been really, really challenged. Then along come tokens. And if you look at the meme coin market cap last year, it was like $140 billion. You look at the Trump token, love it or hate it, doesn't matter. It proved a really important point, that over a weekend, 36 hours, you have a token that comes out with really no value. It's a meme, 15 billion market cap, 80 billion FTV. And so the secret power, the superpower of tokenization is this capital formation, right? We're working closely with companies like Superstate that are now saying, well, wait a second, we can work with regulators now. We can create transfer agents that, like, blockchains are amazing transfer agents. They track who owns what. What if we can leverage this new technology to breathe new life into our public markets? And so it's a really exciting time as they're working to take companies public using blockchain technology and leverage that capital formation. I think some of the stuff that we're seeing around private markets is very interesting as well. So, for example, in the United States, about 81% of companies are private with over $100 million. That's not a good thing because private companies are private, and people, normal people can't access private companies. They're not allowed to. They're not accredited. Blah blah blah. And so, what Robinhood did was they took some OpenAI private equity, they tokenized it, and they provided people access to it. It was very innovative. Maybe not the best execution, but I thought it was really interesting. But I do think there's going to be an opportunity to take private equity to allow people to have access to private equity using public tokens. And I think in the future, companies will work closely with issuers on helping, maybe start putting a little bit of private equity out to see how the market responds, and then follow through with an IPO. So much going on in the tokenization space. Why do we care about tokenization? Well, it unlocks new opportunities for collateralization, better settlement, better access, better capital formation. So that vertical continues to be very, very exciting. And we're working every day with portfolio companies to navigate. If you were to ask me, one of the biggest risks is probably security. And as we're starting to put $3 trillion on chain, we're starting to put tokenization on chain. I still think we need to address some of the security issues, and working very closely with a number of folks to try to think through enhanced ways to attack that.
Encrypted is your exclusive ticket to the epicenter of technological innovations in the MENA region. Actually, talking about tokenization, I think you probably might have heard about a real estate tokenization project that was also initiated here by Dubai Future Foundation together with VARA, the local regulator in the UAE, and also Dubai Land Department. And I can see that you yourself, your colleagues, you're coming more often to the financial events in the UAE. So can you tell us, are you still right now focused heavily on some new interesting projects, Web3/AI projects coming from the UAE? And will real estate tokenization projects like RW tokenized startups that are focusing on tokenized real world assets, is this something you're going to look into if we're talking about the Middle East and UAE in particular?
I love going to the UAE. And the thing,
we love to have you here.
Yeah, it's the way it's really differentiated itself, and it did so through a very contrarian take. When we were in the darkest days of lawfare and regulatory assault here in the United States, the UAE moved forward and said, hey, we're going to provide transparency and nuanced regulation around cryptocurrencies. And by the way, I'm not saying that it was easy. It's not easy regulation, but it was the right type of regulation. It recognized the uniqueness of the asset class. And whether you're talking about VARA, ADGM, and others, like they came up with very, like, not like relative, like not easy, but very transparent and nuanced regulation that formed an incredible foundation, and it differentiated the UAE in a very material way. When other jurisdictions were going in an opposite direction, they did the right thing, then they led. And so, like, I cannot be more thankful to the approach, and I think it's paying off. And why is it paying off? Because again, if you have clear and transparent regulation, that's the foundation. And if you have a strong foundation, you can build. And so what has happened? You've been able to attract world-class developers and world-class builders. And so when we go to the UAE, it's wonderful to be able to meet face to face with some of these world-class founders and see how they're building on top. Tokenization will be a big part of it. Real estate hasn't been an easy thing to get done, and I'm not entirely sure why, but it's amazing that you guys are leading forward. We were tracking the projects closely, and again, it's been really amazing to see. Now you have a bit of a head start, and again, the fact that you have such great talent in Abu Dhabi and Dubai. And also, we have great partnerships with some of the other investors, like Further Ventures. We work very closely.
Amazing.
We collaborate with them regularly. Excellent people there. So yeah, we look forward to additional collaboration. It's a great place to be, and I've really enjoyed getting to know the folks in the UAE.
Fantastic. We definitely would want to have you for more events. By the way, Dubai Blockchain Center is going to introduce very soon important event. I want to ask everyone to stay tuned. And Chris, I'll definitely talk to you about this later, so we can also invite you perhaps to our event as well, because it will be also heavily focused on the emerging trends, some of the most important trends whenever we're talking about emerging technology. Can I ask you, so I'm curious right now from your perspective, as we can see what was happening in the UAE. Everyone who's following Encrypted, I think you know a lot about all of the developments happening here. Right now, a lot of focus obviously is because of the new acts and the regulations of crypto in the US. Everybody is also paying attention to the US very closely. Do you think that, as you mentioned, some jurisdictions, they were like going different way? Do you think that they will be like following the suit of US, UAE, and they will be changing their perspective on crypto and AI, and let's say / integration of AI with crypto?
100%, they have to. It's either adapt or die. And the thing is,
the same as with banks.
Yeah, the thing is that cryptocurrency rails, blockchain rails, provide a better system. They provide greater access, and in many cases, lower risk, because you eliminate settlement risk. So let's just talk through a systemic risk lens. I was at Lehman Brothers. I've seen so many stresses over my career, working in the derivative space. Most of those stresses come down to liquidity risk, right? You can't get capital when you need capital, and then people go insolvent, and it creates a chain. So if you have two systems, you have one system that's settling and balancing in real time, 24/7, adjusting and balancing for the risk in the system in real time. And you have one that's settling T+1, T+2, T+3, closed on the weekends, closed at nights. When those stresses happen, you'll have one system that balances and the other system where what's left behind. That system is prone to fail. And so the solution is not to slow down crypto and say, well, wait a second, we got to they're too slow. They have to be able to rebalance the risk themselves. No, the solution is we need to update the system. And that's why I expect for every jurisdiction to get on the train, because otherwise it's really a risk issue for them. And they need, and they're going to want to have the talent as well. We lost talent. Like I said, the UAE really benefited from talent. And without that talent, your economy is really going to struggle. And so if you're anti-innovation, if you're anti-crypto, you're anti-AI, good luck to you. Because it really hits your economy, in a real material way.
Yeah. Chris, What do you believe in the next, let's say, 5 years from now? What will be the key determining factors, including some geopolitical events that will be shaping the future of Web3 in the US, in the UAE, and globally?
Yeah, it's hard to,
Foresee,
really,
obviously. If you had a
it's hard
crystal
to
ball, as
really,
they say.
yeah. Look, markets go through cycles. Cycles go up and cycles go down. I think the trend for crypto and technology is always, up over the long term. And from our perspective, we are long-term investors, and it's very obvious to us where the markets are going long term. When we see
So tell us.
geopolitical, sorry?
So tell us about long term. Where do you see the markets going right now?
Oh, long term, I think, for the major cryptocurrencies, we know that we think we're going north. We're going to continue to see innovation. We're going to see breakthroughs in AI that are going to blow our minds. It's going to transform our economy. It's going to transform our financial services in a very good way. Hopefully, we're going to see more accessible access. And look, this whole AI, the innovation we're seeing around AI is just leading to just an explosion of knowledge. So I feel like, things are going very, very well. And that, again, that regulatory foundation is really going to fuel the growth. We also see quantum on the horizon. God, if we have the breakthroughs that I expect, that AI will potentially unlock massive breakthroughs in quantum, in healthcare, like I think every single discipline stand to be revolutionized by all these innovations that we're seeing. Geopolitically, it's very difficult to tell, what happens when. I've spent a lot of time in the geopolitical space. I'm the co-chair of the Blockchain Association's National Security Vertical Committee. Oftentimes, these are events that are tragic and nuanced. From a market perspective, the market seems to be very resilient. It'll be impacted in the near term by geopolitical events, but as they work themselves out, generally it doesn't impact the long term as much as we've seen. But yeah, we're incredibly bullish for the long term, based on the innovation that I get to see every single day.
Thank you, Chris. Right now we move to our rapid fire questions. Stay tuned with Encrypted. Rapid fire questions. Chris, I'm going to ask you very quick questions. You answer one sentence and we move on to our next one. Are you ready?
Yes, ma'am.
Answer the first thing that comes to your mind, okay?
All right.
If you had to explain blockchain to a child, how would you do this in one sentence?
It is a new way. It's a ledger that allows you to track who owns what.
Okay. Which blockchain founder would you like to take on a road trip?
Satoshi.
If you found out who Satoshi Nakamoto was, what would be your first question to him, her, or them?
I mean, I would love to know their background, and they invented Bitcoin coming out of the global financial crisis, so I want to understand how they were impacted.
What would you never do while building a company?
What would I never do while building a company?
Yes, would never do.
I'd never do it by myself.
Okay. Name 5 qualities that you believe a real entrepreneur should have.
Resiliency, grit, optimism, focus, and excitement, passion.
The biggest misconception people have about Web3.
That it's a tool for criminals.
Bitcoin or Ethereum? Or
Ethereum.
let me ask you this. What is your favorite crypto?
Well, I would say Ethereum was my first love, and I don't have a favorite crypto, but that was my first love.
Fantastic. What will be harder for you? Explain DeFi to a 5-year-old or teach your parents how to use MetaMask?
Oh, my parents by far.
Oh. Imagine that you are a character in Cypherpunk movie. What's the most Web3 thing you would carry with you all the time?
My ledger.
Amazing. Finish the sentence. My business philosophy is
Winning.
fantastic. By the way, the same answer had Sergey Nazarov from Chainlink the last time we had him here. Yeah. How often do you practice your keynote speech before going on a stage?
Very rarely.
Okay. Which Web3 buzzword makes you cringe the most?
RWA by far. I hate that so much. As a banker, it means risk-weighted assets, which was like it was the bane of my existence.
The next big tech trend to follow?
Probably quantum.
What's your personal formula for success?
Work harder.
And Dubai for you is associated with?
Innovation.
Today we had Chris Perkins, managing partner and president at CoinFund. Thank you so much for watching. Thank you, Chris, for joining, and see you next time. From the gleaming skyscrapers of Dubai to the innovation hubs of the Middle East and beyond, Encrypted brings you thought-provoking discussions, exclusive insights, and stories of innovation that will leave you inspired. This episode of Encrypted is sponsored by Gate, a leading global cryptocurrency exchange established in 2013, serving over 35 million users with spot, futures, and margin trading for 3,600 plus cryptocurrencies, holding $12 billion in reserves with a 124% reserve ratio, and ranked second worldwide in 24-hour spot trading volume.